Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi. Welcome to the week that was. Indian assets recovered after 3 consecutive weeks of decline amid positive global sentiments. After a weak start to the holiday truncated week, Indian equities trended higher later in the week, posting gains in the last 3 trading sessions. The Nifty index rose 1.3% over the past week, but underperformed most developed market and regional peers that bounced back from oversold conditions. The S&P 500 index jumped 5.7% in the first 2 trading sessions before paring gains sharply on Friday. With this week's gain, the Nifty index year-to-date 2022 price returns remain flat, while the negative gap from its October 2021 peak decreased to 6.3%. Broader markets outperformed Nifty index, with the Nifty Midcap index up 2.4% and the Nifty Small Cap index up 2.6% over the past week. Among sectors, all sectors ended the week in green except FMCG, which fell 1.8%, while metals and capital goods were the best performing sectors, with gains of over 3% during the week. Indian fixed income markets remain under pressure as bond yields rose across the curve amid rising US bond yields and disappointing reports of a delay in India's sovereign bond inclusion in global bond indices. For the week, the 10-year Indian government bond yields rose 6 basis points to close at 7.46%, while the 3-year and 5-year Indian government bond yields rose by 16 basis points and 8 basis points respectively over the past week. The INR remained under pressure over the week, hitting a new all-time low against the USD amid a sharp rally in crude oil prices, strengthening USD and rising US bond yields. However, improving foreign investor inflows limited the INR losses. For the week, the INR fell 1.2% to close at 82.3 per dollar. During the week, we had a few macroeconomic data reported. The first was on India's manufacturing PMI, which fell to a 3-month low of 55.1 in September compared to a reading of 56.2 in August. Output continued to rise in tandem with a sustained improvement in new orders, while new export orders rose for the 6th straight month. On the price front, input costs rose at a slower pace since October 2020, while selling prices went up at the softest pace in 7 months. The second data was on India's services PMI, which fell to a 6-month low of 54.3 in September 2022 from August's reading of 57.2. Both output and new orders grew at the slowest pace since March of this year amid inflationary pressures and competitive conditions. On the price front, input price inflation eased to an 11-month low, while output cost inflation slowed to a 6-month low. At this point, I'll take a pause and thank you as always for listening. If you find this podcast useful, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.